mean, I think that this is a very important idea that in some respects, the future is running at us, right? So some of the trends that we saw in place before the COVID outbreak have been really dramatically accelerated by the outbreak. And the mentions, obviously, things like inequality, globalization, macro policy, and sustainability are basically the four mega trends, super trends that are really being pushed, very, very strongly at us by the crisis, right? The inequality, obviously, public health crisis exacerbating, entrenched forms of inequality across income levels, race, countries. The pandemic has exposed global supply chains to vulnerabilities and geopolitical tension and in the health crisis. And policy really has gone through a revolution in many respects, right? Blurring the lines between fiscal and monetary as one sign. Obviously, the entrenchment of policy in the capital markets is something investors are going to have to deal with for a very long time. We could talk about that later because I think that's a very important part of the outlook in terms of asset prices. And then lastly, I think, investors have put a huge premium on sustainability, right? And this is another example of what, a heightened sense of concern that investors have about sustainability. So, yeah, I mean, I think the crisis, obviously taking a step back, has really accelerated four trends, which, make it, which investors have to pay attention to as they go forward.
Scott, I know you probably don't want to talk about single names, but when you talk about the inequality story and you also talk about the acceleration in some trends, the stock that jumps into my mind is Facebook at this point, because it's in this tug of war of you seeing a greater shift towards digital and some of those e-commerce trends. It's trying to be a player in that aspect, but at the same time it's caught up in some of the social issues. What do you do with some of those concerns around a stock like Facebook and other stocks that might have a similar story in future?
Yeah, I mean, I think, again, not to single out a particular name, but to talk about, about just the market in general. Clearly, a number of names and factors have really benefited from obviously the digitalization, the movement into internet-based transactions, et cetera. And so from a quality perspective, that's something that we continue to like despite the outperformance. But here I think it's a very important point is that, the landscape is changing, right? As economies reopen, activity restart being our first investment theme, it's about how economies reopen and what investors and what consumers do. And I mean, your points around Facebook, again, bring two of these trends together, right? This idea around kind of inequality, and then the idea around sustainability and how investors are handling the movement into digitalization. So I think it's a very interesting time, but I think it's exactly the point that we have to look at: how does the world emerge out of COVID-19, and what are the trends, what are the activities that individuals and companies do that's different than it was before?
Scott, it feels as though investors have been very quick to pick up those assets where you have seen an acceleration of those trends. I mean, the FANG performance has been clearly stunning. You've seen a lot of remote working that's been up certain office stories where you've seen them position that space very nicely. Also, even around real estate investments, those where they are part of data centers, storage facilities, or the new economy of deliveries, if they own logistic warehouses, those are improved. So there has been this focus already where those stocks have accelerated. So what do you do from here? Do we see a broadening out beyond some of those themes, or do you say that these particular areas of the market that have already performed will keep on performing?
I mean, I think there's a little bit of both. I mean, one of the areas that we particularly like, I heard you talking about it, particularly as we look at recent performance, is European stocks. And so we have upgraded our European view from an underweight to an overweight, really on the basis of a few things. One is the policy response, which we can talk about later. But obviously, that's been a very big upside surprise in Europe for a number of reasons, right? Fiscal, what's happening in Germany, the EU Recovery Fund, the ECB's action, all those things have been very powerful. Plus, when we look at activity restart again, we see a country a region that's dealt with the virus, although very severe outbreaks initially, had a very successful way of dealing with the virus right away, and that seems to be setting them up for a very positive kind of reopen. And so one of the areas that we talk about for investors, particularly investors that have predominantly been focused on the US market, is to look at Europe as an interesting way of playing the different ways that economies are going to reopen and the different ways that that activity is going to emerge. And so for us, Europe is an area where we had been underweight and now we've moved to overweight.